Tesla's stock is currently in a sell-off as evidenced by the constant decline of the stock till now and other factors. Just how long will the sell-off continue? When the prices of investments rise, things are excellent for investors. However, the value of such investments will inevitably fall apart at some point. Ups and downs are part of the market's nature. A sell-off, on the other hand, is not the same. It's a sale of securities such as stocks, bonds, commodities, and currencies at a rate faster than the daily rush of market prices. What is a sell-off, and how do you spot one? Why is the market currently experiencing a sell-off, and will this sell-off last for a long time? Let's find out. Tesla Incorporated has suffered more volatility than any other vehicle stock in history. It's gone from a disruptive startup to a social media darling thanks to its equally polarizing CEO, Elon Musk. No firm has arguably better embodied the market's alleged speculative overvaluation than the electric vehicle manufacturer, which has just witnessed a startling drop to begin 2022. The stock has been in a relatively constant decline, prolonging a tumultuous period of trading fueled by concerns about inflation, increasing interest rates, and the possibility of a European conflict. This pattern is not unique to Tesla stock though. The S&P 500 fell 2.1%, ending the week in the red, while the NASDAQ composite fell 2.9%. The poorest performers were tech businesses, with Meta, Facebook's parent, falling more than 4%. Google's parent company Alphabet was down 3.8%, while Microsoft was down 2.9%. Tesla, one of the S&P 500's largest businesses, fell 5.1%. Tesla's stock has dropped over 21% in the previous months, far outperforming the S&P 500 in the same time frame. The drop is mostly due to a general sell-off in high-growth, high-multiple firms as investors prepare for tighter monetary policy and higher interest rates this year. What's this sell-off? A sell-off occurs when a significant number of securities are sold in a short period, causing the security's price to drop rapidly. As more shares are offered than buyers are ready to accept, the price may fall further as market sentiment becomes gloomier. Sell-offs are based on the supply and demand theory. The price of an investment will fall if a big number of investors opt to sell their interests without a matching rise in buyers. As traders swiftly sell their securities, the prices of those securities tend to fall at a similar rate. In fact, market sell-offs frequently cause prices to fall too low. Sound familiar? That's what's currently happening with Tesla stock. But what exactly is causing this? A couple of factors could trigger a market sell-off. The announcement of disappointing earnings reports or weak guidance, fears of greater competition, or the prospect of technological disruption are all possible catalysts for a sell-off. Sell-offs can also be triggered by broader factors such as macroeconomic concerns or natural calamities. Apart from a disappointing earnings report, all of these definitely apply in Tesla's case. With many brands trying to unseat Tesla as the leading electric vehicle brand, many competitors are waxing stronger this year. There's been news of several companies pumping huge sums into the electric vehicle sector. This caused unease among investors. Technological issues have also contributed to this unease. The chip shortage problem that Tesla expanded on in their last earnings call is still at large. On the topic of macroeconomic concerns, the Russian and Ukraine situation is a huge concern to investors. Option traders appear to be hedging their bets, signaling that they believe Tesla's recent downward trend will continue. That's because as the stock price has fallen and the electric car market continues to grow, recent option order sentiment has moved from positive to pessimistic. The initial bullishness of option trading has now begun to give way to bearishness. While call options have a nearly 60 to 40% advantage over puts in the 30-day average for Tesla option trading volume, the 5-day average narrows the gap to 53 to 47%. Based on the overall number of contracts traded recently, trading volumes were virtually evenly split. When examining the national value of total contracts, trading volumes skewed bearish. This is because supply and demand play a large role in the price of most assets traded on the open market. The available supply of an asset rises as the number of merchants interested in selling it rises. For example, if stock market participants start actively seeking to sell their shares, the quantity of shares available to buy will increase. Another fact we feel contributed to the present situation was when Elon Musk began to sell off his Tesla shares. According to the documents, Musk exercised his options to purchase 2.17 million Tesla shares. He sold a total of $9.85 billion in Tesla stock last month, including $6.9 billion the week of November 10th and another $1.9 billion on November 15th and 16th. Some of the shares were sold to cover tax liabilities arising from the execution of the stock options. This wasn't a very good move according to Chris Weston, head of research at Pepperstone in Melbourne. When dumping a big exposure, the last thing you want to do is betray your hand. When you have an overhang like this, purchasers tend to flee, but this is no ordinary story, and it's Musk's method of retaliating against the idea to tax the wealthy with gains of unrealized earnings. He may very well be right, as since October 28, 2021, several current and former Tesla board members, including Robin Denholm, Kimball Musk, Ira Ehrenpreis, and Antonio Garcia, have sold hundreds of millions of dollars worth of Tesla stock on the NASDAQ stock exchange. So, how long will this sell-off continue? Following a sell-off, there's frequently a period of correction during which prices recover to some extent. For example, let's say a sell-off occurs when a rumor surfaces during market hours that a company is likely to announce a highly dilutive purchase. However, the business issues a statement claiming that no such conversations with the supposed target have taken place, and the stock swiftly reverses course and resumes its upward trajectory. So far, all the elements that seem to be facilitating the sell-off are still in place. Tesla announced in their last earnings call that no new models would be released. Despite the impressive numbers of growth and value revealed in the earnings report, a lot of investors seem to be looking forward to the release of the Cybertruck, as well as the more affordable model Musk had previously mentioned. The reason for this is the shortage of manufacturing materials, which is still yet to be resolved. This, we believe, caused even more of a decline in the stock. Tesla skeptics are louder than ever speculating that the brand has peaked, so market sentiment is shifting and many investors are trying to get out while they still can. This might not be the smartest move because all the indications point to the sell-off ending soon. The first quarter earnings call of 2022 is fast approaching, and according to experts, it's bound to be a good one. Some believe that the statistics in the upcoming report are bound to outperform the results of the last quarter, which were quite impressive. On the topic of production, it seems Tesla has found a way to reduce costs as Panasonic, their partner on this project, is on its way to producing superior battery technology. Also, Tesla's finally gotten the go-ahead on their Berlin factory, which is pertinent to their plan of dominating the European market. These are all bullish catalysts, and we foresee a shift in market sentiment towards the positives once the results of the first quarter earnings are released. Despite the recent sell-off in Tesla shares, the firm is still by far the largest automotive manufacturer in terms of market value. Tesla's market cap is approximately 3 times that of Toyota Motor Corporation, its closest industry competitor in terms of size. Tesla's stock has dropped 22% in the last month, compared to a 6.3% growth on Toyota stock. It's worth noting that the profit projections for 2022 have risen by as much as 16% in the previous 3 months, which explains why despite the massive sell-off in the high PE group, the market is still able to bear the sky-high valuation. According to past performance, TSLA stock has had a good chance of rising in the coming month. In the past 10 years, Tesla stock has seen a 21-day drop of 21% or more on 71 occasions, with 65 of these resulting in Tesla stock increasing over the following 1-month period. This historical trend indicates that Tesla stock has a 65 out of 71 chance of rising in the future month, signaling that Tesla stock could be a decent choice in the near term. Once this happens, we believe the market psychology will change and the sell-off will cease. What do you think is causing the Tesla sell-off? When do you think this sell-off will come to an end? Comment down below.